Welcome to Imagine Wealth Without Risk, the podcast that guides you to fulfilling your dreams through guaranteed, secure investing. Here's your host, Ted Thomas.
Welcome to Imagine Wealth Without Risk. This podcast is about making money with tax lien certificates and tax deeds, which, as you already know, are tax defaulted property. I also include an interview with my guest, Dave Dubeau, on how to create income in order to help you grow financially and help you create new ideas. Now, if you're wondering why I would do that, it's because the business of tax lien certificates and tax deeds, after you've learned the process, is really a part-time job. Usually most people spend 5 to 10 hours a week. This isn't going to be full-time. Once you learn how to do it, you'll spend a little time, and the auctions are always scheduled, so you can schedule your time pretty well around this. Now, if you're going to go into the fixer-upper business, that's a whole new ball game, and I don't recommend that. I do recommend you buy the tax defaulted properties. You just buy them low, and then if you can, sell them quickly to a fixer-upper person or someone like that. Now, am I negative on fixer-uppers? No. I'm just trying to caution you because fixer-uppers require so much cash. You're always putting up money, and there's a good chance you'll run out of money right in the middle of the project, and what's going to happen then? Then you're going to lose your money or something. I don't want that to happen. So I like people to start, buy a property, and then quickly resell it. Today, I'm going to do something a little different. In my past podcast, we talked about tax lien certificates. We talked about tax deeds, which are tax defaulted property. Today, I'm going to talk about redeemable tax deeds. Now, let me say that again. Redeemable tax deeds, which they sell in Georgia and Texas, and I'll tell you about the different states that do that. But right now, let's narrow it down to Georgia because this is unusual. So these states don't do what tax lien states do, but they pay pretty nice rates of return. For example, Georgia is a redeemable tax state. So that means you go to the auction, visualize yourself there, you're raising your hand, you're buying a tax deed. Now, a tax deed, as you remember, that's the conveyance device between the county transferring the property to you as an individual. So you're buying a tax deed, however, it's redeemable. Oh my goodness, this is a whole new ballgame, right? Now, they do the same thing in Texas, which I won't cover right now, but you're getting the idea. So right now, let's just do Georgia. So Georgia has a redeemable deed. So you buy it anytime in that 1 year period after you purchased it, the property owner can come forward and redeem that tax deed that you bought. In other words, they can come and buy it back, just like what happened with a tax lien. However, the state is not too benevolent about this. The penalty when that property owner comes back and redeems the deed is 20%. So that means if you raised your hand, you bought a tax deed, and now the person or the property owner comes in to redeem, they have to give you back all your money and a 20% return. Now, that's not an interest rate of return. That's a penalty return. So let's talk about this penalty stuff for just a minute. The penalty is for 1 day or 365 days. So if you bought a tax lien certificate today and they come in and pay you tomorrow, they have to give you back all your money plus a penalty of 20%. Whereas regular tax lien states, they have amortized rates of 1.5% a month in Florida or 18% a year. So here's how this works. All of the counties in the state of Georgia, and there's about 159 of those counties, all of them are authorized to sell redeemable tax deeds. Now, every county won't have an auction every month, but the majority of the counties will have auctions, and they do that once a month, usually the first Tuesday of the month. And that's mandated by law. So you can plan on that. So with 159 counties, you're going to have more auctions than you ever dreamed about going to. Now, will they all have 400 properties? No. Some of them have 6, some of them have 16, some of them have 30. It's that kind of thing. But they'll have it every single month. So they're not going to wait to get their money. They're going to get these properties out there and auctioned as quickly as possible. Now, the county is required when they're going to seize or confiscate a property to give due notice to the delinquent property owner. So simultaneously, while they're giving due process, giving that notice, They'll also notify the bank or any other lien holder that's recorded at the county records. So that's called any other lien holder that's on title. You don't need all these fancy words right now, but just keep in mind when anybody has a lien on the property, it's more than likely recorded at the county records. So that would include a lien for a judgment, like in a lawsuit, or a mortgage, or a deed of trust, or a contract of sale. Now, those liens are recorded at the county records, okay? Some people say they're filed at the county records. Okay, so continuing, the county will have a process. And the process simply is give notice to the homeowner and give notice to anybody that's on title that they're going to confiscate the property. Now, they'll do that by sending written notices. They'll also put that in the newspaper. And of course, they'll publish that on a website. So the newspaper would be called the legal newspaper. Now, I don't know what the legal newspaper is going to be. It could be any number of papers that bid to get that status. So it might be a big newspaper, it might be a small one, it might be multiple, but you could ask at the county and say, what's the legal newspaper? And you could ask at the county, will these be published on a county website? And of course, the answer to both of those is yes. So I've been guiding people through this process for a number of years. And when you first hear about it, you get a little bit baffled. It sounds like it's heavy duty and going to be hard. It's not. It's really a simple process. But what I'd suggest, if you did have to seize a property or foreclose on a property, I would simply hire an attorney to do that. Could cost anywhere from $1,000 to $1,500. Although I just had one of the students tell me it only cost him $250, but that'll be another podcast that we'll talk about. So simply stated, the county will give notice. The notice will be published in the newspaper, also published to the county. So now there's plenty of auctions. At the auction, they're going to sell a redeemable deed. So if this is the first time you heard that, don't be baffled by all this. They'll start talking about FIFAs, which are judgments. They'll talking about lien process and whatever. All this will get simplified as you read it a number of times. It's not a complicated process, but if you've never been through the legal end of things, it sounds a little bit that way because of the words they're using. Nothing to be afraid of. Nobody's done anything wrong. People have had crises and they couldn't pay their taxes. So the government says, wait a minute, we need some money. So if you don't pay your tax, we're going to take your property and sell it to somebody else. As I say, it's a little bit different. So let me do a quick review. The county will sell a redeemable tax deed. Now you got that. They'll do that once a month in the state of Georgia. Okay, there'll be hundreds, literally thousands every year. Keep in mind, the county only wants money to pay the bills for the county, and that's what they're after. So today I'm discussing penalty states. So there are states we call tax lien states. Then there's other states we call them tax deed states. And now I've got another name. There's a penalty state. All right. And I'll have another one as we go along. But right now, we just want to narrow it down. We know there's tax lien states, there's tax deed states, and now there's redeemable states. Now, in the redeemable state, you can buy the certificate and you might have to hold it. If you hold it 1 year in Georgia and the people decide they want the property, they have to come in and pay you whatever you paid plus 20%. That's a penalty return. Now, if they haven't paid you by the 366th day, in other words, 1 day into the new year, it's no longer redeemable at 20%. It's redeemable at 30%. And if they go after the second year goes into the third year, then it's redeemable of 40% and then 50%. I'm sure you're getting the idea. Okay, now the county only wants their money. If they don't get paid, they're going to issue a redeemable deed. If you don't get money, you're probably going to have to get an attorney and do something about foreclosing on that property. Now, I'm not going to tell you to do that on your own. I'm going to tell you take your time, let an attorney help you. It's not difficult. The property owner may not be anywhere within 1,000 miles. Okay. The deed is basically sold at auction. You buy it, and you can keep in mind that the owner could come forward at any time and pay you. When they do pay you, your minimum rate of return, let me say this to you a couple of times. Your minimum rate of return is 20%. Now, I don't know any place you're going to get 20%, but here's one right here in Georgia. Later, when I talk about Texas, it's 25%. Now, keep this in mind. If you bought the deed and they come in 10 days later, you're still going to get your 20%. They come in 150 days later, 20%. You're always going to get that rate of return. So these are powerful ways to make money. Now, I know it's a little confusing, but just relax. It's new. The business is new to you, not difficult to do. When you invest your money, you're going to invest it directly with the state. In other words, your money is protected by the state and by the property tax code. That redemption is something that the county and the state is doing to keep people from losing their asset. They don't want people to lose their property. So when the people come in to pay, you're going to make a nice return. 20% return, you'd like to do that all day long. If you don't get paid, you're going to get the property, and then you can go on and resell it, and you'll be able to resell it without a mortgage in many cases. Okay, so I spent a little time on Georgia. If I talked about the Carolinas, or I talked about Texas or Rhode Island, each one of those states will be a little bit different. There's 5 penalty states. The big ones for doing this are Texas and Georgia. My associate Bob Schumacher, who we'll hear from later on in this podcast, has done over 100 deals in Georgia and made at least 20%. So that's something you'll want to start thinking about in your portfolio. First year is 20%. Second year you make 30%, and 40% the year after. All other states are not paying penalties. They're going to pay amortized rates of return. So Georgia's unique, Texas unique, Rhode Island's unique, Ohio's unique, and so is Indiana. So I started this all back in 1989, and this has certainly become sophisticated since then. In those days, and I'm not bragging, believe me, at that point in time, we had to drive to the county, and then we had to go to the treasurer's office. And when we got there, we had to request a tax lien list or a tax defaulted list or a redeemable property list. And we had to go through all that. And they might have to print it for us because not a lot of people did that. But then after we got the list, then we proceeded into the county records room and the map room, and we would look the properties up. And then once we looked them up and we had the property identification numbers, then we would start looking up the property in the files and find out if there were any liens on the property, whatever. And so that took us some time, not only just to get to the county, but to go through all these different offices. Now, with the computer systems we have, we not only can teach you to do that online, we can give the learning systems online. So I have learning systems. I call them distance learning. For example, my intensive business growth system, and we teach people how to buy property online, and we teach them how to do all this research online. So you're getting the idea. So this is pretty healthy business and a way for you to make money. Now, fortunately for you, the counties have become organized and they're used to people requesting this information online. I can tell you stories, I won't today, about treasurers that actually retired on the job. And I'm not making a joke. For example, in Douglas County, Nebraska, something happened with the treasurer, I don't know what, but they didn't auction any properties for 5 or 7 years. And then finally, the Board of Commissioners found out there was properties all over the county that they hadn't confiscated and resold that were deteriorating, and nobody was paying taxes. When taxpayers find out that others aren't paying taxes, I can tell you they get pretty darn cranky. Those properties all had to be sold at fire sale prices. They had the same situation in Jacksonville, Florida, and they ended up with 8,000 properties or a number like that that were not being taxed and were not being resold. And when the new treasurer was voted in, thank goodness, she sold those properties for 5 cents on the dollar. So all kinds of weird things happen, and you'll hear me say it in my 3-day workshops. You're entering the world of the weird. And sometimes when I explain these things, people say, "Are you crazy?" Well, I'm not. And so now you've learned another new way to make money. So we've learned about tax lien certificates. We've learned about tax deeds. Now we've talked about redeemable deeds. So we're getting step by step through this process. I hope you're learning a lot. We're going to move on now to Coach Bob Schumacher, and he knows more about Georgia than anybody I know, but he's presently right in the middle of an interview, and that's where we're going to pick up next. So I hope you learned a lot on this particular session, and if you have questions, you just remember, go to info@tedthomas.com, info@tedthomas.com, and I answer those questions every morning, so you'll always have an answer in 24 to 48 hours. And I'll have Linda come and tell you about 3-day events and things like that somewhere before we finish this podcast. Okay, I'm Ted Thomas. Welcome aboard. Glad to have
you. Hi, it's Linda. 4 times a year, Ted Thomas invites students to a 3-day auction preparation workshop. It's very exciting because Ted and the coaches tell all the students how to make big deals and little deals live in the room. Are you interested? Email info@tedthomas.com for more information.
Another part of the buying tour was, me making sure that everybody checked the weather forecast before they left home.
Right.
They brought the right clothing.
Exactly. Oh, man. How many times have we not done that? Oh.
Yeah. So the morning of the tax sale, it was about 40 degrees.
Yeah.
The sale was outdoors and a pretty brisk wind coming from the north.
Yeah.
The county did one thing, though, the county officials. The sale is normally held on the north side of the courthouse, which there ain't no sunshine there, right?
So they moved it
in the winter. And so they moved it to the east side where the sun was shining on, and that was a little more comfortable.
Oh, that was good. They were caring for us bidders, right?
They were caring for themselves, too.
Yeah, exactly. Stop criticizing the government. They take us in the sun to spend our money. That's how good they are. Oh,
yeah. And this county was really good at working with our students. That one of them discovered that that the county would email you an updated list if you asked for it.
Nice.
Or if you walked in their office, they would just print one out for you. So they were really good at keeping us current about which properties had been redeemed.
Yeah.
And by redeemed, for those of you who are new, that means that anytime up to when the tax sale begins, the delinquent taxpayer or say a bank who has a loan against that property, they can come in and pay those taxes, and that property will be taken off the list. Redeem, you can sale and pay that 20% penalty that we've talked about.
I think your experience is the same as mine. It might be different, so you can say so. But my experience with the counties has been they're okay. They want to help us out, but they're not going to help you in the sense, all right, you go buy this one, go buy that one. The decision-making process is up to you. But if you have a legitimate question, I've never had them turn me down and not want to help me with an answer or go try to get some research. Now, I don't think they're as good as researchers as we'd like, but I've always had pretty good luck with the counties. They're there. They know they got to be there for, I guess they start day one starting there 30 years, but most of the people seem like they've already been there 30 years when we get there, but they've always been cooperative for me too.
They generally are. And sometimes the person you talk to has actually seen the property, because a lot of the counties will post a sign at the property saying notice of tax sale. And so if somebody's living in the house there, it's hard for them to say, I was not notified when there's a sign in the front yard.
Yeah.
And so sometimes they'll say, oh yeah, that one's a swamp, or oh yeah, that house burned.
Right.
I don't think you want to do that one. They'll give you helpful hints like that, but they're not going to tell you something that they won't tell somebody else.
Yeah.
But you might learn more than the other guy because you asked and the other person didn't.
Yeah, just treat them right. Treat them right, and they're going to treat you right. They're not allowed to give you legal advice or anything like that. But so let me stay in the same questioning area here. But there's a perception from people that all auctions are bargains, which I don't believe, and I doubt if you do either. But how successful would you say you are? And now you've done well over 100 deals, I know. How successful are you when you're buying at auctions? Would you say 25%, 50%? I'm not trying to put a number in your head, but what would you think about that? What do you think?
And I'm saying right now, maybe one auction out of 3, I buy something. And early on, 20 years ago, I hit a sweet spot where there was one nearby county that was having an auction every month, and not that many people were showing up. And so I was buying something almost every month. But I got a lucky break there. But it's going to vary depending on where you are, how many total properties are on the list. I went to an auction over in South Carolina last December, and there were about 300 properties that were sold.
Wow.
And so when you have that many properties, even if you have some big money people in there, you stand a pretty good chance of getting something just by the sheer number of properties that are there. But some of these sales are quite competitive, and there's plenty of sales where I could have bought something, but the property sold for above my limit. And so I'd rather go home and keep my money and save it for another property sale or another tax sale where I can get a property at a much better price.
Yeah, I'm not going to bid against you. Can you tell me what your limit is? Yeah,
It totally depends on the property.
Okay, you're not going to tell me that. Oh, okay. There's always the guy that's trying to look over your shoulder, though.
And so never display your maximum bid. I really and truly have been at auctions where the person standing next to me had a spreadsheet and one column was labeled maximum bid.
Yep. Yeah.
And it so happened the last time I recall that happening, all of his maximum bids were higher than mine, so it really didn't matter that I saw them.
Yeah, but you want to be private. You really do want to be private no matter what. Yeah.
Yeah, you really do.
So when we talk about small properties, that's a pretty subjective thing. I tell people when they're in the classroom, I say, look, don't buy these properties unless you can make, after all your expenses, you really need to be thinking about making $10,000, $15,000 or $20,000. Now, when you go to a lot of smaller auctions, which you would do in a state with so many counties, you might have a different parameter. But what sort of parameters should people be thinking of? This is not a get-rich-quick thing. Now, I have clients that make $100,000 the first year. People make $100,000 on one deal, but every deal isn't like that. So in your touring around these different properties and so on, you're in a state with this, I'm going to say, and you correct me, I think 70% of Georgia is a rural state. And so that means there's going to be a lot of these 10-acre, 8 acres, things like that. So you're not going to make $100,000 on one of those, but give me a sense for what a small, like I'm telling people, for goodness sake, why would you buy that house? Yes, you could get it for $5,000, but it would cost $25,000 to fix it. It doesn't make any sense. So where do you draw the line, or what advice do you like to give people?
I pretty much agree with everything you just said. And for me, like I said, early on, I was buying lower value properties and then realizing that it was more trouble than it was worth. If that piece of vacant land does not have an assessed value of, say, $15,000 or $20,000, it really isn't worth getting into, because you're going to have your fixed costs of foreclosing on it, and you're almost certainly going to have to sell it at a discount from assessed value in order to have a quick sale. Yeah, and there are properties where I'm willing to make $5,000 just because I'm there at the auction and it's available and I live close by. But if you live a long way away, you need to be making at least $10,000 off of that deal to make it worth your time.
Yeah, that's what I feel.
And houses, always allow yourself a cushion, because in most cases, you've never seen the inside of that house and you don't know the condition. There are a few places, for instance, some of the New York auctions and some of the Michigan auctions, where the county has already taken possession of the property and they will arrange tours where you can see the inside of the house. That's more of a rarity. If you have not seen the inside of the house, don't assume that it's pristine, because
it probably ain't as right. That's for sure.
Yeah, and sometimes there's clues too. A lot of you've probably seen the TV show about hoarders.
Yep.
There are a lot of hoarder properties that end up at tax sales.
Oh boy, that's
so. When you see the junk spilling out into the side yard, and they can't even close the door to the garage because it's so full of junk, you can imagine what the inside of that house looks like.
Yeah, and don't assume those are collectibles. That's for sure.
You can. The dumpster will collect all that stuff.
Yeah.
That's what's going to collect it.
Or better yet, it might be multiple dumpsters. I bought a few of those, right? Yeah. Now I'm going to run out of time. I'm sure happy that you came on the call, and I appreciate you and your such short notice to help out, and so I can get this information out to people. Can you spend the last minute or so and just review with us, if you would, about there's a code that requires that we clear the title on some of these properties, and that means you have to go through a clear title process. And can you describe that again? And just, it's not that it's complicated, it's just unusual, and explain it from that perspective.
Yes, and keep in mind that you don't really have to know that much about it yourself. You just have to find an attorney who is competent to do it. And there are some law offices out there that specialize in it. So it's called quiet title. And what you're doing is you're going through a court action in which everyone who may potentially have a claim against that property gets notified through the court system. And once the judge is satisfied that everyone has had their say, and usually nobody answers. That's the typical outcome, is that nobody answers. It still takes a few months for it to all go through the court system. But when it's all said and done, the judge issues a final decree, which is recorded in the deed records. And that decree says that no one else out there has a claim against your property. And once you get that, then you're free to sell it. And you have no trouble at all, say, if the title company or the law firm that's doing the closing, they're not going to object and say, hey, wait a minute, that was a tax sale property and you can't get title insurance. So you have quiet title, you have title insurance. Those are two different things, but they are interlinked in that once you do a quiet title, then you can get title insurance.
Okay. Now, when you say you have to do this, you really mean you have to hire somebody to do this, because we as lay people can't do that. It takes an attorney who then takes it to a judge, and that's how that's done.
Exactly. So
Okay.
I've met a couple of investors who do it on their own, but you really have to know what you're doing, because it's not an informal thing. There's all these pleadings, there's all these things that you have to file with the court that have to be filed exactly right. And so an attorney knows how to do it. I certainly don't. I don't even try.
Yeah, we
myself.
don't need it. Why waste your time with that? It's not a profit-making deal. It's just for some people to be a glitch. For other people, they just say, oh, just call the attorney, it's done. My approach to it is let someone else do it. And so I should ask again, approximately how much does it cost? I think the cost depends on the attorney, or is there a standard or what?
It depends on the attorney. It depends a little bit on the property, but it's in Georgia, I find that it's usually around $3,500 in today's market. I did have one a couple of years ago that was quite a bit less. It was just a local attorney that had done a lot of them, and he was able to ram it through in about 2 months. I don't know how he did it, but he got it done. But don't expect the courts to move fast, and don't expect to do it cheap. Just before you bid at the tax sale, just budget. Keep in mind that you'll probably have to spend $3,000 or $4,000 to get the title cleared.
Okay, great. So, folks, now I'm going to transition over to my guest for today, who's Mr. Dave Dubeau. Now, Dave and I go back for, I'm going to say 5 years, and every time I say something like that, they say, no, Ted, it's 7 or 10, but it's something like that. And this is a highly qualified guy. I've had a good time working with him because we made a ton of money together, a ton of money. And he's come to a couple of my events, and he would, if he didn't live so far away, he would probably be practicing what you and I are practicing in the tax lien and deed business. So, Dave, how are you doing today?
I am absolutely fantastic. Thank you, Mr. Ted Thomas. It's a pleasure, and thank you for having me on your show.
Okay, great. I'm happy to have you here, and tell everybody where you are right now.
I'm in lovely Kamloops, British Columbia, which is about 3.5 hours north of Vancouver. And
wow, nice.
Yeah, life's good in the loops.
Okay, can you describe that countryside? Because I tell everybody Vancouver is my favorite city in the world because it's so pretty, but you're right in the middle of a beautiful province. Tell us, just give us a 1-minute version about that.
British Columbia is probably one of the most beautiful places on earth, and where I live is absolutely gorgeous, but it's not what you think of when you think of Canada or you think of British Columbia, because we look a lot more Arizona. Where I live is actually the northernmost tip of the Sonora Desert. So we've got lots of movies come here to do their filming for westerns. We've got cactus, we've got rattlesnakes. It's an arid kind of a place. So not what you would expect when you think of Canada, but absolutely beautiful.
A sun belt, you must be between the mountains or something like that. You got a lot of mountains around you?
We do have quite a few mountains around us. That's right.
Listen, I've been to Kamloops, and I love that place. So that's really great. All right, let's talk about my podcast is about tax liens and deeds, but I like to bring a special guest like yourself to talk about making money. So can you give us a little background on what you do and how you make your money and things like that? Just roll with it, whatever you think comes off the top of your head.
Thanks a lot, Ted. Yeah, so I'm a real estate entrepreneur myself as well. I've been involved in real estate. Actually, I figured out pretty much all my life because my grandfather and my father built a sixplex that we lived in and I grew up in. My mother was a very active real estate entrepreneur. She grew a portfolio of about 54 doors. in the
Wow.
70s and 80s by herself. She and my father got divorced, so she was actually a single working mother doing that herself back in those days. But my very first real estate investment was when I was about 11 or 12 years old. My mother was working on a project and I wanted to get involved. So I scraped up $200 and invested it with her. And she affectionately said, I got to own the garbage stoop. So that was
Oh my God. Oh my God. Oh my God. Oh, Jesus.
that
Oh,
was my first foray into real estate. And then after that, I went through university and got a basically asinine degree in psychology and decided that I might as well go see the world because that's not very useful. So traveled around Mexico and Central America for a long time, settled down in Costa Rica, lived there for 10 years.
really?
Had a successful language training company down there. And then I started dabbling in a little bit of real estate down there as well. Did a few foreclosure deals, which worked out quite well. Then in 2003, moved back to Canada with my Costa Rican wife and our two little Costa Rican kids, because we thought Canada would be a better place for them to grow up, which is, I think, true. And I had to start all over again from scratch. So I was trying to figure out what the hell to do. And I came across one of our mutual acquaintances, Mr. Ron LeGrand, who had a course about how to get into low money down, no money down real estate deals.
Yeah.
I said, that's perfect because that's what I got. I got low money or no money. So this seemed like a good place to get started.
Yeah.
So that's what I did 18 deals in 18 months. It was my little
Wow. That's a lot.
claim to fame. And then I started working with, after a few years of that, started working with our mutual friend, Darren Weeks, became the marketing guy for his company, helped grow that from him and two other people to over 120 employees and 7 branch offices and $200 million raised, at least a lot more than that, I think, over the next 4 or 5 years. That's where you and I first came into contact, Ted.
Yeah.
And then in between there, I've done all sorts of different things with real estate. I started doing rent-to-own deals. And more recently, I've gotten into multifamily properties, which is my main focus these days. And as far as I'm a marketer at heart, as you are, my friend, you're a master marketer, that's for sure. So what I do these days is I help other real estate entrepreneurs attract joint venture partners or money partners or investors, whatever you want to call them, and raise capital for their deals without getting in deep due with the securities commissions or the trade commissions. So that's
and that's an art form in itself, isn't it?
Yeah, it is.
Yeah, it is an art form. Yeah. Here, you led right into that perfectly. That's why this call, what the call is all about. I want people to learn other parts of real estate, number one. But number two, I'd like you to talk about how do you get one of these things started? Because now, as I listened, you went through 3 or 4 different iterations of what you did in your life there. And how do you restart like you just did? And how do you get into business like multifamily? And obviously, you had a lot of experience to get there. But tell me a little bit about that.
You know what, Ted? I actually figured out that I suck as a real estate investor. That's what I got to realize. I realized I'm not really into dealing with tenants and toilets. I like finding deals. I like negotiating deals. And then once it's up and running, I very quickly get bored with the detail stuff of managing a property, managing tenants. So what I decided to do is partner with people that are a lot better at that than I am and help raise the money for the deals, partner up with them, and be more of a passive investor. Focus on what I'm good at, which is raising the capital and doing marketing.
Okay. All right. Now I got it completely. All right. So you're helping other people build their business because you're the money man. You make it rain. You're the rain man.
Exactly. Yes.
Okay. I never even envisioned talking about this. So let's go off track a little bit here and let's talk a little bit about that. So give my listeners some insight. All of these people are in the same position. What they are is they're starting out. And as you and I both know, as soon as you get in real estate, you buy 1, but then you want 2. And then when you get 2, you want 3. And there's always a need. You use up those savings accounts, your pension plans, whatever. You use those things up very quickly. And you need to start thinking about raising money. So I didn't expect to talk about this, but give us a couple of tips on that. I remember going to one of your classes on this, and it was really something. It took you 2 hours to give the class. It was unbelievable. And I remembered about 2 minutes. But what I remembered was this was a damn good class. So tell us a little bit about that, because these people are going to get into that same situation.
Yeah, for sure. No, that's perfect, Ed. Thank you. So yeah, your folks are perfect candidates for this because We all run out of money and or credit for our deals. In your case, we don't need credit for it. But you and I have talked about this before, Ted. Typically the best tax deeds and tax lien deals are the bigger ones. Yeah, sure, you can go out, you can get a certificate for $50 or a couple $100 or whatever, but that's chump change. Right. Where you really want to get to, where your students really want to get to, is where they're going out and they're tying up those bigger properties like you teach them to so well.
Right.
The question is, how do you do that if you don't have the cash on hand? Because you're in a cash business. You have to come up with that money.
Absolutely.
Get that lead or that lien or that deed. So here's the beautiful thing, Ted, and your students, I'm sure they can relate to this. Most of the people that they know, most of the people who are in their sphere of influence don't have the faintest clue about real estate investing and the power of investing in tax liens and tax deeds. Would you agree with that?
Oh, 100% agreement. As a matter of fact, it's the biggest challenge we get through because everybody says it's too good to be true.
Yeah.
And so they don't do it. They're afraid to do it because this guy, I don't care if he's got a blue suit on and he's being real honest and all that, and he's got a good reputation. I don't believe it. And so
exactly.
Absolutely.
So the beautiful thing is, when your students go out and they do their first few little deals, even if they're the $100 or the $1,000 type deals, if they get a little bit of a track record, now they've got something they can show other people, and there's proof. That's what people want to see. They want to see people who they know actually doing this, and then it makes it a lot more real, a lot more believable for them. Ted, what I show my clients and my students to do is I show them that they want to focus on communicating with their sphere of influence first. We want to avoid running out and making the big mistake I see people making all the time, which is talking to the general public about our real estate deals.
Waste of time.
Especially up here in Canada. I think it's even worse in your neck of the woods. That's crossing the lines into dealing in securities. When you're selling something like that or offering something like that to the general public, the Trade Commission and the Securities Commission sees that as selling a security. And you're only supposed to do that if you're licensed, typically if you're working for the big banks, if you're a mortgage broker, if you're a realtor, those kind of things. So you want to avoid that in order to stay out of trouble. So what do? You focus on the people that you have a pre-existing relationship with. They already know you, you already know them, and that is an area we are allowed to work in. And quite frankly, in order for anybody to invest with you, Ted, there have to be three things in place. They have to know you, they have to like you, and they have to trust you with their money. Does that make sense?
Know you, like you, and trust you.
Yeah, nobody's going to invest with you. Nobody's going to invest 15, 20, 50, 100, or, as I suggest for my clients, getting people to invest $100 or $150,000 or more with you. They're not going to do that unless they have those three things in place. They know you, they like you, and more importantly, they trust you with their money. Does that make sense?
Absolutely.
So when we focus on people that we have a pre-existing relationship with, 2 out of the 3 are already taken care of. You already know each other. You already like each other. They probably trust you to babysit their dog for the weekend, but whether they trust you with $25 or $50 or $100,000, that's
another question.
That's what it simplifies our life so much more because we only have to overcome that one hurdle. Does that make sense, Ted?
Yeah, it makes a lot of sense. Good.
All right.
Yeah.
So what I suggest to people, I know we can't teach the whole thing in this interview, especially just.
Well, do as much as you want because this is the kind of information my people want. This is really solid. This is really solid.
All right, buddy. So here's what I suggest people do. We start off with a target group of 200 people. 200 people that we have a pre-existing relationship with. Now, when I teach this at my workshops, everybody freaks out and says, Dave, I don't know 200 people. There's no way in heck I know 200 people. But they very quickly realize that they know a lot more folks than they thought they did. And here's a little exercise for your listeners. If you just grab your cell phone right now and you open it up, you go to your contacts.
Oh,
I know how this works on an iPhone. You go to your contacts and you scroll down past the Z or the Z, as we say up here in Canada.
Yeah.
Scroll down to the very bottom. That'll show you how many contacts you have on your cell phone. When I first did this, I was blown away. I had over 900 contacts on my cell phone.
Oh my goodness. Wow.
If you did this, Ted, you'd probably have a hell of a lot more.
I can't count that high. I'll have to have Linda help me. Absolutely.
So then what we show our clients to do is, okay, get all those contacts off your cell phone, export it into a spreadsheet. If you don't know how to do that, just go on YouTube. It'll show you how to do that. Okay?
All right.
So that's one place to start. Next thing is take all your contacts from your email addresses. Okay, so if you got an email, a lot of people have had a Hotmail account or a Gmail account or whatever for 5, 10, 15, 20 years nowadays.
Wow.
Grab all your contacts, export them all into that spreadsheet. Same thing with your social media contacts. You got all these Facebook friends and all these Twitter followers and all whatever, LinkedIn contacts. Get them all out of there, get them onto that spreadsheet. And now, Ted, instead of having to come up with 200 people, now you've probably got 600, 700, 800, 1,000, some cases 2,000 or 3,000 contacts.
Wow.
And it's so much easier if you just go quickly through that. And here's the criteria. So this is write or downer, guys. When you see a name, if a face pops into your mind and you have a warm feeling about that person, keep them.
Oh, great.
If you don't, if you see the name,
establishing standards already. Okay, good. I got it. Yeah, good.
If you see a name and a face does not pop into mind, delete it. Okay, because that's not a person that you really know. Does that make sense?
Yes.
So when we do this with our clients, we can actually do this in about 45 minutes, even with a list of 1,500. It's just keep, delete, and bang, voila. There you go. You've got your list of 200 people.
Terrific.
So now what do we do with them, Ted?
No, I don't know. I know what I would do. I'd get on the telephone, but you probably got a good procedure. This is really a worthwhile call. I'm really glad you're here. This is great stuff.
Well, you're way better on the phone than I am. I suck at cold calling. So I'd rather stick a needle in my eye than cold call somebody.
That's true. That sounded bad. That sounded bad. Oh, my God. Oh, yeah.
Here's what we're going to do. We're going to do we're not going to do what I did the first time I did this, which is spam everybody and say, hey, I got a deal. You got it.
Oh, geez.
Well, it wasn't quite that bad, but that's
I got it. Yeah. You sent an email, thought you were going to get rich.
It didn't happen. No.
Yeah.
All it did was it pissed off a lot of really good people is what it did.
Yeah, really. Yeah.
Here's what we're going to do instead, Ted. We're going to warm them up. We're going to reconnect with these people on a personal level first before we start talking business. Does that make sense?
Yeah, it makes a lot of sense. Absolutely.
Yeah, because some of these folks, they haven't seen you for 5, 10, 15 years.
Right.
So we don't want to just come right out of the gate saying, hey, I'm looking for some cash.
Yeah.
So what we're going to do instead is we're going to break the ice. We're going to reconnect with them. And what I suggest people do is they do a little 3-step warm-up campaign.
Oh, you're really pretty good at these numbers now. I got to remember it. When I'm with you, I got to get a pen. 1, 2, 3. I remember this now. I remember. Oh, great.
Yeah,
3 steps.
I got the whole banner behind me here, buddy.
Oh, do you? Okay, good. I'll move the camera around. That's great. I love it. This is just what I wanted. It's
all
perfect.
Right, perfect.
Yeah.
So 3 steps. First step is what I call the Christmas letter from Aunt Nadine.
Oh.
And Ted, you and I both remember back in the day before the interweb came along, before email was around, when long distance phone calls were crazy expensive, and people used to actually write letters.
Yes.
It doesn't happen much anymore, but that's how
right.
people
That's
used
right.
to do it.
Absolutely.
So my Aunt Nadine, every Christmas, used to write a Christmas letter, Xerox it.
Oh, sure. Tell about everything. Everything. Yeah, good.
So we want to do our own little modern day version of that. Just about a 1-page email catching people up on what we and our families have been up to for the last, let's say, 5 years.
I got it.
Talk about work, talk about the spouse, talk about kids.
We got a new St. Bernard. Yeah, I got it. Yeah.
All that kind of stuff, right?
Yeah.
Warm and fuzzy. And then here's the key. At the end of the email, you say, hey, that's what I've been up to. How about you? Please hit reply to this email and let me know how you're doing. There's magic in that, Ted, right? You send that out. And then when people reply, and a lot of people will reply, then you have a genuine reconnection with them before you start talking business.
I love this. This is wonderful. This is really a worthwhile call. I love it.
Awesome. Second step is we do the same idea 3 or 4 days later, but we do a little video message, Ted. And you and I both understand the power of video. Video is huge these days. So we do basically a video version of that. And again, at the end of the video, we say, well, that's what I've been up to, but enough about me. How about you? Please click reply to this email and let me know how you're doing. I'd really love to reconnect.
Wow.
Bang, you send that out. It's a short little video. You can do it on your phone. Nothing fancy, no green screens, nothing professional, just quick and easy. Send it out and you'll be blown away by the kind of responses you get from that. It's absolutely
unbelievable.
Yeah. And then 3 or 4 days after that, we do that third message. It's called the transition message. It says something like this. Hey, it's Dave Dubeau here again. It's been really good reconnecting with you over the last week or so. Just want to let you know that I want to do a better job of staying in touch moving ahead and letting you know what I'm up to with real estate investing, especially with tax liens and tax deeds.
Yeah.
Because you know what? This is the best thing I've seen since sliced bread. And I think it's the best way for everyday people like you and I to get an above average return on our money backed by something solid, and that's real property backed by the US government. I've been doing really well with this myself, and who knows, maybe sometime in the future, you might even want to partner up with me and share in the profits on these deals.
Oh my God, this is wonderful. This is really good. This is very
But you
good.
know what? If you're not into the real estate, that's okay too. You can always click unsubscribe at the bottom of any of my emails. You'll be taken off the list immediately. In the meantime, you know what? If you haven't had a chance to get back to me, let me know how you're doing. Please click reply to this email and let's catch up. Take care. Talk to you soon. See you later.
Wow, thank you for that. Thank you. That's terrific. That's you're amazing. I forgot how good you are. My God, you're absolutely fantastic. This is great stuff. All right, so you shared some really valuable information. Go ahead. Go ahead. I talked in your words. I'm sorry.
No, that's okay, buddy. I mean, I can go on and on. I mean, I do.
Well, I'm going to have you back. Not to worry, but I've only got 11 minutes left. So let me tell you, I want to ask you a couple of questions because you've got experience. Now, I like people with experience. They can't see you, but I'll tell them you got a little bit of gray hair. Well, you got a little hair, but a little gray hair, okay? But I think I got more than you still. Look, I'm going to go here.
Son of a gun. You got way more hair than I do.
Yeah, but we're doing audio now, so they can't tell. So I used to be skinny and had black hair. I'm sure you are too, but too late now. From experience, you've got a lot of experience. So I want to pull some of that out of you now. Tell people about the mistakes that you've seen people make, or maybe you made them, or whatever, in real estate, because we all know you put 10 deals together and somehow that 11th one almost chokes you to death. It's just, we all think we're getting smarter and every deal's a challenge. I don't know if you ever had a challenge, but you don't have to talk about it if you don't want, but tell us a little bit about some of the mistakes that you see. You've got a vast amount of experience and you've done it internationally. That's very important.
Well, mistakes, I made a lot of them, Ted.
Yeah.
Definitely made a lot of them.
Yeah.
I think probably one of the biggest mistakes I made was focusing on the wrong strategy for a while, or doing a strategy the wrong way. So for several years, I was doing what are called client first rent to own deals, which in theory sounds great. So basically you find a good couple or a good person who's got a good job, good income, but for some reason doesn't qualify for financing, doesn't qualify for a mortgage right now.
Right.
And there are a lot of those kind of people. So perhaps they've gone through a bankruptcy, perhaps they've had some credit issues, perhaps they've gone through a divorce and that's really kicked the heck out of them. These kind of things. But they're getting back on track and they probably can qualify for financing in the next 3 or 4 years. So what we were doing is we were finding these people, then we would go out house shopping with them. We would get a non-refundable deposit up front from them, and then we would go out and buy them a house and do a rent-to-own deal with them for the next 2 or 3 years and sell them the house at the end of the time, which, at an increased value.
It's not so easy. That's hard. That's hard. That's
hard
work.
It's a lot of work. There's a lot of work in it, and it works really well in a market that's going up.
Yes.
It works really badly in a market that's flat or going down. And what happens to pretty much every real estate market sooner or later, right? It's a cyclical thing. Yes. We know this. Yeah. Ted, you know this better than anybody.
Oh boy.
You've seen it firsthand.
Yeah.
So cycles markets go up, they go down. That's normal. But that strategy is a killer in a down market. So here I can't remember how many I had. I had 7 or 8 of these deals on the go when my market went down. And then guess what happens?
People lost their jobs.
Not so much they didn't lose their jobs, but the value of the house was not there.
Oh, right? The values went down. Oh.
Yeah, the value of the house ended up being less than what I paid for it. So there's no way that I could sell it to the person because the bank wouldn't finance it for the increased price. So that was a big mistake that I made. Now, there are ways to get around that. There are ways to do it, but that was one of the bigger mistakes I made.
I see. Okay, so that was all right. So the strategy is important. Give me some other, I love to hear you say it's the word strategy because I think everybody does the same thing. They just say, buy it low and sell it high. And that was very easy to say, but it's ridiculous. Maybe you can buy it low and sell it low, but you're not going to do both. It's just too difficult because you never get in at the right time. You never get out at the right time. But it's very hard to tell an enthusiastic real estate investor that. And talk a little bit about strategy, if you like.
Well, yeah. So I'm not a big fan of flips. And bottom line, rent to own is like a 2 or 3 year flip is what it is. And there's a lot of risk involved with that. If the market's not just right when you're ready to exit, it's not going to happen. So I'm much more interested in long-term buy and hold of properties, just because if you've got time in case the market goes sideways, you're not worried about trying to get out of a deal in 2 or 3 years. You're looking at a deal for the long term, 5, 10, 15, 20 years, whatever it might be, right?
Absolutely.
So that's my focus. I love your focus as well, because you eliminate the risk because the government's backing you up. So
I get the risk out of it. That was a big thing in my life. I picked the wrong strategy too, because when it went up, man, we got leveraged out to 120%. People say, how could you get 120%? It's really easy to get 120%, especially if the government will let you write it off. And so we were doing fine. I want to change. You already know the rest of that story, so I won't bore you with it, but I'll tell the listeners on another podcast about that. Okay, so you liked rent to own, but then the market's changed or it became too much work. So now you're into a new thing. So talk a little bit about why you pick what you pick. What do you like? What should entrepreneurs be thinking? See, I have a ability to attract a lot of people. So this podcast is just starting, and we're already getting up to into the hundreds of people that are subscribing, and we've never told anybody yet. So it's going to start to, but we're going to get a lot of different, and they're going to be varied backgrounds. And so I can't tell you what a pleasure it is to have you here, because people don't talk about what you're talking about, and that is how to raise the money. But you've been through a number of cycles. So rather than me talk anymore, tell me about the cycles and what you like and what you don't like.
So you mean, what are you asking me, what I recommend people do as a real estate investing strategy?
Yeah, now you got a lot of wisdom. There was a time when you didn't have all that.
But here's the beautiful thing about real estate, Ted, is there are so many different strategies out there. And I think obviously most of your listeners are going to be more focused on tax liens and tax deeds,
right?
Which, although I haven't done it, I've hung around you a lot. I've hung around you a lot. I've hung around DJ a lot, and quite a few of my contacts.
Oh, I have from your client base is the best client base I've ever worked on. Now I'm gonna go off track here. I only got a couple of minutes, but I'm gonna give you time to tell everybody, folks. You guys don't know this, but Dave and I have done business. Complete transparency here. We've earned $300,000 together because Dave recommended me to his list, and people bought my product. And then I went to Canada and I visited with people on his list. I traveled 15, 20 cities in Canada, all as a result of Dave introducing me to people there. And I've got to tell you, the Canadian client is superior to any client I've ever met in the world. And I have people from Bangkok. I have them from Australia. I have them from Singapore. I have them from the UK. The Canadian clients are the absolutely best. And that's a result of knowing you. So that's...
And here's the other side of the coin. I personally know a bunch of those clients who've made a hell of a lot more than $300,000 from following your teaching and actually doing what you show them to do. Exactly. I mean, our mutual friend Kelly has just, done amazing things.
We should go to his house and take lessons.
Yeah, Deb in Kelowna has done amazing. It's phenomenal what people have done.
Yeah.
So I know it works. I haven't done it myself.
Yeah.
Because I'm focused on something different, but I love the fact of what you do.
Okay. I got 2 minutes left, and the 2 minutes is yours to tell people about you and how to contact you. First of all, start it with your contact information and end it with that, and you've got 2 minutes.
Awesome, Ted. If folks are interested in finding out more about how to attract investors and raise money for their deals without cold calling, which I don't like to do, without endless networking and schmoozing, without getting in trouble with the Trade Commission or the Securities Commission, without coming across as needy or creepy, I've come up with a process that just turns everything around. And instead, what we do is we attract investors. We get people to put up their hand and say, hey, you know what, Ted? I'm interested in finding out more about your deals. Could you tell me more? And that is such a pleasant conversation to have, because then you're just basically showing them what it's all about and allowing them to make an educated decision as to whether they want to invest with you or not. So if your listeners are interested in finding out a bit more about that, they can get a free copy of my newest book, which is called Money Partner Formula.
Wow.
If you'd like to get an ebook version of that, they can just go to investorattractionbook.com, because that's what it's all about. It's all about attracting people, attracting their money to us instead of pushing ourselves on people, instead of coming across as needy, which is always creepy, right? We want to avoid that at all costs. So again, investorattractionbook.com if they'd like to get a copy of my book, and that'll get them into my world. And I'll be in regular touch with them after that.
Okay, that's really good. And you hit all the timing right on. That was absolutely perfect. Listen, I want to thank you for being here. You're going to promise me you'll come back after we get a few more of these episodes, because I want you to teach a little bit more like you did today. That was so fantastic. Okay, this has been it's been enlightening for me, as it always is, but I know the audience is really going to love all this. So thank you again. And I'm Ted.
Thank you for joining us today. Go to tedthomas.com to learn how you can start making smart, secure investments today. Be sure to check out the rest of the episodes to find out more about Imagine Wealth without risk.